Good morning. It is sometime. It's the 8th of September, 2025, 0800 Central Standard Time. Welcome to Risk Neutral Trading. This is my virtual trading journal. I do this because I believe journaling is important. I'm hyper fixated on transparency and accountability. And I don't multitask well, so I capture everything on my monitors as video, and then my voiceover provides insight into my thinking at the time. This seems to be working out pretty well. I have a real strict commitment not to take any trade on the accounts off of the stream. And let me see, the stream seems to be flowing along nicely down the hill. That's good. Okay, cool. So there's that. Now, I'm not monetized in any way here. So, I'm only in this for the likes and subs and more than that, probably. Drop something in the chat. That's great because it's a lonely business trading. But remember that this is my personal trading journal. So, when I use the term you or whatever, when I'm talking to myself. And I hope that somebody being able to listen in or look over my shoulder could help at some point. It's not for any financial or trade advice, obviously. I'm talking to myself. It's my journal. And another reason I do this rather than a typical or conventional journal is I don't multitask well. So for me to be screen snapping and typing and things like that dilutes my focus or distracts my focus away from trading. In this way, I don't have to deal with that at all. So that's pretty handy. I stream in 1440p, so if it's a little grainy on your end with YouTube, click the gear thing and select the high def. That's kind of handy. Pretty funny this. Yeah, so let me see here what else. One of the things about the not for financial or trade advice, there is a built-in delay on YouTube. So even if you were trying to understand what I said as a signal or trade based on that, what you see, be real careful because as we know, the markets move quite quickly. And a few 15 or 20 second delay could actually be in a trade and past the scale by then. As far as that, be really careful, sure that you confirm the market price, what the market price is doing. That's why my methodology I think is helpful because I'm not reactionary. I anticipate a potential trade and then I zoom in to interact with the market at that anticipated point. So that should give a good heads up. All right, let's look at the numbers, of which there are essentially none today. So that's a good thing. Kind of a breath of fresh air there. It's not the one. There we go. There's consumer credit for July. I want to point out this is September. Consumer credit for July is only a 2-star deal, and it's at 1,400. However, we have an unrealized or a potentially random critical risk right here, and that's President speaking. Not any political statement, but it's pretty obvious by now, I think, to pretty much everybody that there are a few members of the administration that are extremely fond of the sound of their own voice and camera friendly. And it's also obvious that the potential for them to say anything random or whether it's, fact-based or not is high. So, and these all seem to be market moving events. So anytime Trump or his closer cabinet circle get near a microphone, or I'm always very cautious about it. And in this real random market environment, protecting your risk is really important. Let's look at the pre-market now. I should have said something else here before we do the pre-market. These are my news sources. This is Financial Juice. It's got basically the same calendar here as investing.com with a bit of a kind of a touch of Squawk Box on the right. This is investing.com. It's the one I've used for both numbers and earnings for ever, years, 10 years or more maybe. I like it because of a clean, simple presentation. It's nice to snap and post other places. Both of these are free, so there you go. Now, back to the pre-market. Well, here is IRT. This is Renko chart. This is the ES Minis, NQ Mini. ES Mini higher time frame market, micro composite chart, and the market profile. You can see here's Friday, RTH session. And here we are so far in today's ETH. Very big sell-off, typical B-shaped profile. Maybe better to think of it as a B-shaped over here, and that indicates long liquidation, selling. This is the higher time frame chart, which is the micro composite, and it's real simple. This is the RTH session only. And these are daily candlesticks. Now, wherever price overlaps, I draw a volume profile around them or continue to draw it. And in so doing, it generates the high and low volume nodes, which are these red and green lines, and the micro composite VPOC. When price doesn't overlap, here was a gap down. That one ends, and I start a new one. Very simple. Now, I'm going to do something here that I wanted to do, which is right there. Ooh, yeah. Okay. I only want the high and low volume nodes being pushed for the most current volume profile. This is market profile again. So IRT also pushes the session prices directly to Bookmap. We have our quote page. We're at about 120,000 contracts so far on the ES since 1,700 last night. Looks like we're going to open. We're plus 0.23%, which is simply figured, and the green color is only figured by the last price compared to the close, to the settlement, sorry. real heavy volume on Friday. So it looks like, the higher time frame, the under the floor traders or sellers are back from holiday and summer and all those kinds of things. And I also plot this same configuration for the micros and push those levels so that, because I share them with a lot of people. Free, by the way. If you're interested in the price levels, let me know. I'm happy to share. This is my micro composite chart here. This is Bookmap. So here's the micro composite column, and I didn't do my homework because I got sucked into doing something else. Typically, I remove these stale. When I change the text on any of these flags to black, that means it's stale. So there was the POC from the 4th, and it is now stale because it's been traded over, right? So I will just go like that. There you go. This is there's the all-time high and another stale one and another stale gap high, and I typically remove all these stale ones over the weekend, like I said, but I was busy doing something else, trying to figure out how to do this backtesting code. These are the high and low volume nodes. The full session volume profile, which started last night at 1,700 and will continue through 1,600 today. This is the full session or the Globex. This is not a ETH. This is the RTH volume profile, which will reset this morning at 8:30. And here we have a real important column for me, which is my notes column. first thing I do, and you'll see that these are the these are the statistics for the various prices that were put in yesterday or Friday morning before the market opened, just as we're going to do today, and some migrating VPOC levels. First thing I do here is clear the notes. So we start fresh. Boom, there we are. Then the next order of business is to determine the open type. We were higher out of range on Friday. Today we will be higher in range. There's only 4 open types, and it's real simple. There's 2 criteria. If we opened right here, right now, where would that be in relationship to the previous close, which is right here? We were higher than the close, and we would be within range. So we would be higher in range. And the next thing I do is change that column title, and I do that because when I look at a snap or the stream recording, I can see that title and know a whole lot about what happened in the pre-market before there and where we opened, and that's important. This also dictates which column of statistics I use to associated with their price levels, session prices. Now, these are the session prices pushed from Bookmap, from IRT to Bookmap. I get that wrong every day. One of these days, maybe I won't. And they are just straight up. First of all, I don't do anything mysterious, magical, or confusing, I don't believe, in my trading or my analysis. It's all data, probability, and that's it. Overnight high, developing value area high, overnight volume point of control, previous close, previous RTH POC. This is the point of the POC. This is the location of the POC when we closed yesterday, Friday. And one of the things I do there, first thing off the bat, is I put this flag in which says that's the naked volume point of control from 8765.050.925. That is the location of the most recent RTH naked volume point of control. We haven't had another RTH yet, so that's got to be it. The IB low or IB high also seem to confuse a lot of people, and they are simply, because of the naming, it stands for initial balance. That's an old market profile term. And what they really actually represent, are the high and the low of the first 1 hour of the RTH trading session, period. So at 8:30, this is going to jump somewhere else to the bottom of whatever our trading is, and it will continue to move for the first 1 hour, and then it will stop and be fixed, and that's all there is to the IB. We have a POC for both the RTH and the full session. This is for the full session. It's a little more muted yellow. We have a brighter one for the a brighter yellow colored one for the RTH, which we don't see here now. There's the Globex VWAP. There is a VWAP for the RTH, and there's a mid for the RTH. That's it. These highlighted areas here represent resting liquidity in the book. Here's 697 contracts sitting at 65.09 right there. And it came into the book at 5:36. That's all there is to it. This blue line over here is something I do now, which is just a visual cue. I set this blue vertical line at the beginning of each session. My workflow now is to keep the entire session in view on the chart through the day until I anticipate interacting with the market, and then I can zoom in to look at price action. But this way I never lose track of context. Seem to be marching right ahead here, and I'm not sure why. But great, that's great. Okay, so we've gone over the levels. We've gone over now let's look at the statistics, And they're very simple. We have determined we're going to open higher in range. Here was Friday. This is from IRT, Statistic study. There's only 4 types. Really simple. First of all, IRT is gracious enough to highlight the correct column after the open. So there was yet Friday. Here we are, higher in range. IRT looks back at 2,000 trading days. Of these 2,000 trading days, we opened higher in range 603 of those days. Of the days where we opened higher in range, price revisited the overnight volume point of control 500 times, 83.1%. Overnight volume point of control, 83.1. There you go. That's all there is to it. Now, these are not, and then I will simply go down the list. Overnight volume point of control, overnight mid, 76.8. Overnight mid. There we are. Overnight high, 75.5. And so on and so on. Down we go. Value area high. Previous value area high is 71.3. That would be right here. A word about the value area high and developing value area high or low. Developing is for the current auction. And without the D, here just value area high and low was for the previous auction. Previous close is 70.3. I'm looking for the IB low or high. Okay, let's do the low. It's in view. I know that, 61.7. So this is important. And I always put the initials like that because as soon as we open, this is going to not be here. This will not be here anymore. It will go to the bottom of wherever we are. And up here someplace, this will immediately jump up here below that at the low of the current trade, and it will continue to go down with trade as trade moves down. You see what it did here on Friday, moved down to here. Okay, excuse me. In the same way with the IB high, which happens to be 68.5, and let's see if we can find it around here somewhere. There's the open way up here above us. You see how far up? And there's the previous high. Now, notice this, that the previous high and the previous IB high are the same location. And how did that possibly happen, do you suppose? 68.5. That happened because we traded up that high and never came back. So that was the previous RTH high, and it is the previous IB high. We know, because these are at the same location, we know that this previous high was put in within the first 1 hour of trade, and then the market sold off and did recuperate a bit, but never got back. And we also put in a new all-time high up here at the same level. We jumped over, we played hopscotch over the top of these overnight guys like usual, and then there we go. So let's get down to overnight low is 49.4. And that is somewhere over here. Right under there, actually. I'm not going to be able to put it there because we've got the IB low from yesterday. So they tested right down to that IB low. Now, let me, a word about, and let's see the previous low, if that's on here somewhere. Previous POC, previous low is 35%. So, okay. Let me say something about these statistics. Be sure you understand that they are just statistics. They are not hard, fast lines in the sand. They're not targets. They simply represent the probability of times when we opened higher in range that these levels were revisited. Period. Next thing we have to do now is drum roll, please. The TLab snap. And what is that? Pray tell. It is something I do every day at about 8:20, and that is I do two things every day at 8. I do numbers. I post the numbers about 6 o'clock, and then I post the TLab snap about 8:20, and I do that every day in a trading room, a bookmap Discord trading room called the Traders Lab. And it is here's my snap, and here is the Traders Lab. Now, what is that? Well, here's my snap from my IRT. The idea is that the Traders Lab is a bookmap Discord chat room, and it was started by a guy named Tom B. and is maintained to this day. Or led, or whatever you say about a chat room, I don't know. He's a professional trader with more than 46 years of experience trading the markets. Probably the most important thing about the room to me, besides the good common sense and risk management practices, et cetera, is that nothing is ever for sale. You are never, ever solicited for anything, including you don't even have to be a subscriber to Bookmap. You do have to subscribe to or join the Bookmap Discord server, obviously, and then navigate to the Traders Lab Tom B if you feel like it. It's the only place I recommend on the web that's public. The other one would be Static, which is not public yet. Or here, this chat room. There's a link to the Bookmap Discord server in the description here, so you got to join that. I don't recommend any of the other chat rooms in the Bookmap server because I haven't been to them all, and I think there's a lot. I did visit 2 others once, and they were just typical. The third world, word out of the guy's mouth was trying to sell you something, and I'm not interested in that, so I don't recommend them. But I did notice in the TLab that every day I noticed people would ask a lot of the same questions. What's the POC, for example? So I came up with this snap a long time ago, which shows relative price movements over the last few sessions. It shows about all the prices you could imagine. And I post that every day at 8:20 just to try to give back a little because, Tom does share a lot. And I will say this about Tom now. He doesn't trade live, and he doesn't call trades. It's advice. You will never, I don't imagine, ever see his account balance or his, an audited account for verification that he trades live, like he says. You will never see, I'm pretty sure, a wrapped Lambo or gold chains. So, there you go. If that's what you like, well, then get on over to Reddit or somewhere and help yourself. There's a good crew of people in there whose names I won't try to remember all of. I mean, Ned and Rod and Garrett and Harry and Didn't Matter and I don't know, lots of them. And it's a pretty, obviously people come and go, and the theme or kind of the feeling of the place changes over years. I've been there, going in and out of there for years. I used to contribute quite a bit, but I don't anymore. Only the 2 snaps, basically, because I'm focused here on my trading, which is what I think you're supposed to do. And that's where I'm at. So there you go with the Traders Lab. And now it's pretty important before we open here, and we got 5 minutes before that happens, to be able to trade, So the first thing with Bookmap you have to do to trade is activate the trade control panel by clicking this padlock. And then you choose a method. You will interact with the application to trade with your mouse. If you choose chart, the only place you can trade with your mouse is in this active live data column. If you choose DOM, the only place you can trade with your mouse are in the DOM columns. And if you choose both, guess what? You can choose both of them. There you go. Now, in my case, the next thing I need to do, because I trade with multi-brackets, is to activate that. And this is the risk-neutral trading methodology. This is the basis of this whole site, or whatever this is, stream or whatever it is. This is the minimum size package because you have to trade with even numbers of contracts. So this is 2 lots. And then you determine what tick size you want for the whole package of in the stops in terms of ticks, the stop size in terms of ticks for the entire package. Based on your account risk parameters, the volatility of the market, whatever you use, your birthday, Zoom, moon phases, chicken bones, whatever it is, however you do I choose to use 12 ticks in this environment of the market based on my account risk parameters primarily and the volatility. The minute you've selected these, the first risk neutral scale is automatic. It's the same amount of ticks positively as a stop is negative, and it is for half of the package size, 1 contract, and then there's a runner. If you do 4, boom, simple. If it's high volatility, your stop size increases. Now, so that's the risk neutral scale. The key to this whole story is that the minute you achieve the risk neutral scale, the first profit target, the worst you can possibly do on the trade is scratch. You are then risk neutral. Of course, if you are a complete donut and you move your stop away from entry, this no longer applies, and you've got a lot of other psychological issues that you need to deal with first. And then I do the multi-account trading thing here because this trade automatically copies to 4 others. And next and finally, and then I'll get back to that. Finally, I confirm my size here of my contract package. Notice these trade data here, average entry price and ticks and all that kind of stuff are the same as up here. Position, average price, buy, sell, whatever else. So if I can re-click this green, it stays green, stays open, but I have all the same data here. In addition, I have the cancel all and close all, so I don't need, because I use multi-brackets, I don't need to reset up my bracket or my OCOs or anything over here. So I can get the real estate back. By the way, I don't believe you should ever trade your P&L. These will be in ticks. So we're ready to rumble here, and we've got about a minute left. Now, one final keyword is that this whole stream and this whole account is based around a TopStep evaluations story. One account that you see traded here, and it copies to 4 others. And the idea is that this will be a complete, fully accountable, transparent recording or record of 0 to hero, right? For anybody to follow. And these are 50K combine or eval accounts. So that's where that's at. This is live real trading and live data. But you'll notice when I take a trade that instead of just 1 confirmation down here, there'll be 5 go up here. Just add to the transparency. And this is the reason why the stream, we're going to open now in 10 seconds. So I'm going to shut up. I'll get back to that in a minute. This is the reason the stream is so long. There we go. Now there is the open, and this didn't reset as it's supposed to, which is frustrating. I don't know what to do about that. it argues with me and it fights for a while, and we open right on the POC, overnight POC. So this statistic has already been taken out. This has got to go up here a little bit because we pushed up right here. Mid is right there, and the rest are okay. And that's so irritating. This worked perfectly for years, and now it does not. And I can't begin to tell you how irritating that is or why. This is configured to reset at 8:30, and it does not do it anymore. I've also got it set up so that I can double click it in case it doesn't do it, which it didn't. And then I can go like that and it'll recalculate properly. It's goddamn frustrating, boy, I'll tell you. Now what I'm going to do is reset my charting from full session to RTH here. And it's struggling over here. You see the lags? So this is Friday's RTH, and here we are today's RTH. Same with this, same with this, same with this. And now we will save this beauty. And I'll reset my micros the same way. And I do that. Why do I do? Oh, and also I forgot to do the market profile. There we go. Why do I do that? I will explain that to you right now. You see how well I do talking and doing something else, multitasking. And it's funny because I was a pilot for a long time. There's some funny things that happen with regard to those things. I'm dyslexic like crazy, but I never had any problems with dyslexia, flying numbers, navigation, radio signals, any of that stuff. And I obviously, flying is a complex activity, and you doing many things at the same time. Strange, huh? It's like a lot of things are kind of weird that way. I guess it's where your psychology takes over. But anyway, back to the point at hand. The reason I changed those values around, and now we're going to start flagging the POCs, the migrating POCs. The reason I changed them around is for the relationship between the developing value area low, for example, or high, and the regular one without the D. By definition, this represents the previous auction. So the moment that the new RTH session opens, the previous auction becomes the just ended ETH, and that's not what we want in these session prices, or all of the people that take advantage of these session prices being pushed out for free. So I changed it to RTH. Then this now accurately represents the V8 value area high and or low of the current of the previous RTH session. So there you go. And now I'm going to spread this out a little bit, and I'm going to throw Mr. Blue Boy in there. Right there. And again, this is just a visual clue or cue. If I glance left and I can see this blue line over here, I know that I've got the full session in range in view. If I don't, then I need to do something about that. And there you go. Now you know. Now you know all my secrets. All my secrets, all my dirty little secrets. We got through these. It was funny how that worked, but we'll just leave it alone. Now you see that the IB low and IB high are, in fact, faithfully representing the high and low of the first 1 hour of the RTH trading session. That's all it is. And we're going to get up here and unlikely tag out that overnight high. So we opened right on the overnight volume point of control, arm almost a tick away. We've taken that one out. We haven't taken any of the other statistics yet, but we're looking up here at the RTH high. ETH high. Jesus, I need to go back to bed, eh? So there you go. I think I'm up to speed now. No. I got everything all off here now. Okay, what's important is, do we have ourselves set up? We've got the trade control panel active. We've got the proper account size or package, risk neutral package size queued up. Are we copying to the proper accounts? Yes. I talked about that, so you know what that's all about. And here we go. Hidey hi, hoody ho, off we go. A word about these session statistics and price levels. If you're interested, if they could be of some help, I push them live 24/7 from 1700 Sunday night through 1600 Friday afternoon, every day, every week. And they're free. So let me know if that would help. Thumbs up, subscribe, drop something in the chat, and I'll hook you up with those. You can put them in the Cloud Notes column. You can use them as to drive this indicator. You can, it comes as a CSV file via Google. And so you can push them to wherever you want. You could even use just an Excel sheet and reference them if you wanted to. I suppose you could put them into Sierra charts and other places. So there you go. And there's our ETH high. Funny how those statistics get pinned, isn't it? And what are they? Statistics, probabilities. That's what this business is all about. We'll talk about that later. Let me see around the horn here. What did we do? Well, we opened yesterday, Friday, Thursday, Wednesday, Tuesday, the big gap down. Up we go. These are economic numbers. This was all around the uncertainty that the Fed was going to cut. Now it's 100% baked. I mean, it's like everybody already knew that we were going to give it a 25 basis point cut next week. Today is this, by the way, is a blackout week for the Fed. Nobody will be speaking, which is great. So let's see now. We have a naked volume point of control of 6485. Let's see if we have 6485 down here as a micro composite VPOC. And no, we don't. I'm a bad little pig. Right there, huh? Yep. So this is a micro composite VPOC from 50925. Boom, there you go. Now my workflow here again is when a level has been revisited, I change the text color to black, and on the weekends I'm supposed to remember to go back and get those stale ones off of there so they're not confusing. Wow. Did you see how low the value area low was? Now, one thing I want to mention that's important to understand. It's generally understood or accepted that in a large trend day, like Friday was, big range like this, there's not really a value area because price is looking for value, they say. That's from the point of view of the the value area and all of that stuff comes from market profile, which is why I was looking over here. And all the value area represents on my IRT, on my Renko charting, is this blue area is value. The gray is not. And it's just 70% of where 70% of the volume traded. That's that. The theory being that if traders trade there, it's a mutually accepted area that price is, okay, yeah, it's reasonable I'll buy it from you here. And oh yeah, okay, I'll sell it to you. It's a reasonable, there is value to trade there. Okay. So we don't have any reports. We do have the Trumpinator, Agent Orange. That's what Harry came up with. Or not Harry, but yeah, I like that actually. Agent Orange. Let's see what we have for canoes here. So we'll be focused mostly on financial juice because there's the only real number in investing.com is over here at consumer credit at 1400. But this one right here at 910 is a big one. And that is a random risk, unknown, unidentifiable. You don't know. He may say nothing, and he may say, well, I've decided that we're going to declare war on Montana. I mean, you never know. That's the part that's tough. Now, in this environment that we're in now. I think I was on the wrong screen here. Let's do that again. I apologize for my lack of professionalism when it comes to this influencer thing, or whatever you call it, presenter thing. Certainly not influencer. So there we have a. Here's the random, unqualifiable risk at 910. Fed inflation expectations. This could turn into something big over here because this is the New York Fed at 10 o'clock. And right now, all eyes are on the Fed in that. Well, the Fed has two mandates, despite what all of the rhetoric from the administration is. There are two mandates: is to ensure maximum employment, and the other one is to ensure a stable, growing economy. So if inflation is getting out of control, they focus on controlling that. If unemployment is getting out of control, they focus on controlling that and use the tools that they have available to work with those things. Primarily, the tools are the rate decision, the Fed rate, which is the focus of the world at this moment. Now you see what we're having here. Look at this mess. Here's our open. What is that? That is about the zipper from hell, isn't it? That's just a big consolidation area, or, barcode, or whatever you want to call it. What are we doing over here? If you look at the market profile, well, we're trading over all of these singles right here. This is a whole string of singles. And we're trading all over them and gonna, what Dalton and people refer to as repair the profile. In their opinion, this string of singles needs repair. It's not a fully developed profile. Who knows if any of that. There are some surprising things that happen. Not surprising because they're statistical, but it's always interesting to me when statistics bear out. It's further confirmation about, I'm doing the right thing. Or, yeah, that's the correct way to look at it. For example, the gap rules. Amazingly how frequently that works to the T. The statistics that we do every day. And remember now, all of these statistics were put in the market in here before the market opened. And they will remain here until tomorrow when I take them out. So it is a full and transparent record. But it's amazing how, it's not amazing because it's a probability, it's a statistic. So it should not be amazing, but it's pleasing to see that they bear out, that it's the right methodology. And here we go. Hidey hi, hoity ho, here we go. Now I can keep this pretty well spread out now. Zoomed in, if you will. These are 5-minute divisions here. You see the open. There's a lot of levels piled on top of each other right now. Let's get this basically to 1 if we can. Yeah, so there's 1 point high. In other words, each one of these is a point. Within here would be 4 ticks. And there's our whole session so far in view. And there you go. And I probably need something. I'm not sure what. Sneeze, I guess. You guys better be glad I have a mute button because I sneeze loud enough to deafen you, I'm pretty sure. I don't know why that is, but here we go again. All right, beautiful morning. It's 21C, which is 71 Fahrenheit for you F'ers out there. Well, now here's one computer says it's 71 degrees Fahrenheit. I have 3 here, right? My other one is 69 degrees Fahrenheit, and this trading machine is 21C, which is what I'm used to now. My guess is that 71 is probably the more accurate. The way my office here works is I've got a 4 monitor rack in front of me. I have 2, let's start fresh. I have 2 stand-up desks, large ones, in an L. On this one I'm standing in front of, I have a 4 monitor rack with my 2 primary screens here and here, which are 32-inch 4Ks. Then what you can't see to the left on the second stand-up desk is a vertical 27 high-def monitor with all the OBS stuff going on. Those are all driven by this trading machine. On the 4 monitor rack above me, on the upper tier, are 2 high-def 27s, which are run by a second computer. I monitor the stream up there and whatever else I need on the other one. Then around the corner, further around to my left on my other stand-up, is another 32-inch 4K, which is being driven by my old trusty workstation, where I do all the normal crap. The third computer, Outlook and all that. You notice there are no app or Office apps down here. And also it's important to notice, I think, or to pay attention to in the, hey Antonio, bom dia, tudo bem? Your vacation, I assume you're all rested and fit and fiddle and everything? It was quite a crazy time. You picked a good time to leave. Anyway, in terms of the transparency down here at the bottom, you'll see that the stream reflects the entire monitor, not just the application, so you can easily see what apps are open or not, and the time in hours, minutes, seconds, and the date. So I'm trying to, reinforce the transparency here so there's no questions. Good for you. Richard's on a road trip for 2 weeks now. He took off on Friday. Stream's been up and down. It's crazy. It was up to like 50, 60, 50 or something people views, and then back to the normal kind of deal. Been some pretty crazy trading. We have some random risks this morning at 9:10. We've got the Agent Orange speaking, so who the hell knows what's going to happen there. Who knows? Well, you want to say welcome back? Huh? Yeah, Panda was sick. She was missing you, man. She was all sick. Now she's all fit and fiddle. Anyway, yeah, we've got random risk here at 9:10. Who knows? This Fed inflation expectation may be important because all eyes have been on the Fed. That's what the whole market motivation has been lately. It's pretty much 100% baked in now that the Fed cut next week is going to be, like that's a surprise to anybody. They've been telling people they're going to do that for 6 months. But anyway. And I haven't seen, maybe there's been some, peripheral news, been a lot of crazy stuff with going on, as you might imagine, but that's pretty much where we're at. And the only news event, really scheduled news event today is consumer credit at 1400. All the eyes are pretty much on, nobody cares about the environment or the economy in terms of the impact on people. What they care about is, will the Fed cut rates or not so we can make more money? It's really kind of disappointing, but it's the way it works. Yeah, she's all happy you're back now. She's had hello. Pandas. I don't know what it was. She was sick. But, a couple days. Anyway. Yeah, so I don't know. We'll see what happens here today. Friday was a real wild day. I've been continue to be focused on the final vetting of the IB trades. I want to take one more, and that will put these 5 accounts into the XFA. And so I'm not looking at any trades apart from the IB trades, which are, it's really frustrating. Friday was one hell of a sell-off. Any one of the your favorite VPOC migration was a super hit, and whatever else. But that's where we are so far. Okay, let's see now. Right back. All right. This is about a real I don't know. Let's see what the volume's doing here today. Well, the last, it's been kind of a crazy period. The last 2 weeks, so being so light, it was skewing the average volume. now we're under, getting back to normal kind of. Friday was huge, way high, 150%. ATR is about 4. Is that about right? 68 to 98. So far, we've got a tight little range here. 10 handles, essentially. In the first 30 minutes, that's definitely whipping up a batch of retail soup for sure. Look at this POC dancing around over here. Probably a good day to work on your back testing or something else. I've been struggling, boy, just for days on this IRT backtest engine, coding up the basic rules for Rod's IB failure idea, or the static accepted ideas. And it seems so simple. I have each individual rule working, but it needs to be done in steps, And we're getting ready for Agent Orange here, looks like. What is he gonna do now? These kind of days are awfully hard for me because not that any other day is appreciably easier, but I have I used to have a hard code in my risk plan or my trade plan for range requirement, and it's still a pretty big component from a discretionary point of view, which I'm trying to eliminate any discretionary parts to my trade plan, but that's a work in progress so far. And the range requirement simply says that if the final validation for an entry, let's say that you've got to, your statistic has been hit, your target, your parameters have qualified to enter that trade from the back testing and whatever. The final requirement is the range, which is there must be an unobstructed path for price to the first risk neutral scale. And really, quite simply, what that is, there needs to be 3 points from your proposed entry with no lines, levels, whatever in the way. Well, here's 98.5. The first level is 65. That's not 3 points. So if you were going to try to do a mean reversion trade, this is not a statistic, or not a trade, it's just an example. And when we have these kind of days, notice how close all these levels are stacked on top of each other. It makes it pretty tough. Another thing to point out is that notice how there's this difference here now, discrepancy in the line and the flag. That is a known characteristic here in Bookmap, and it's not a bug. The data from IRT, the exact same exported data from IRT, drives this line and this flag. The difference is I'm able to, the smallest, there you are, now they're both together. The smallest refresh rate I'm able to set in the cloud note column is 1 minute. And whoever the boys and girls are that coded up this line over here obviously have it refreshing more frequently. It's the exact same data from IRT, pushed instantaneous, pushed every 30 seconds right there by the export. I keep those up open so I can see what's going on. Make sure they're working. So yeah, here we go. There we are. It's a barcode, baby. It's a barcode. Or a zipper. I always like the zipper idea. $9.05. Well, I guess I'll put on some music here. This is going to probably be a boring session, I guess. Okie dokie.
Passarinho na janela e o fusquinha na calçada, bicicleta.
Oh, look at this crap. Now it's the White House Religious Liberty. Oh my God, look at them. Look at this. Like this guy. Oh, wow. Unbelievable. It's so interesting. I gotta say, the guy is a magician, boy. Absolutely a magician. I don't know what to say. I'll keep my thoughts to myself, but boy, oh boy. Is that ever I've never quite understood how... I guess I underestimated the ability for people to rationalize and hypocritize. I guess. Pretty strange. And here we go. Exactly nothing. Now comes my keep the range in session. Mr. Blue Boy over there. The idea behind this whole concept with the blue line and keeping the range in session is to ensure that I have a firm understanding of context, because I'm real keen on not trading counter context or counter trend. And I understand very clearly that it's all a matter of time frame or perspective, you know. If you zoom into this section right here, guess what? The trend is down, isn't it? Context is down. Oh, let's look over here. Oh wait, context is back up again. And that's the problem that a lot of people have, and that's what you can get into with Bookmap. You can get so zoomed in that you don't, or I can get so zoomed in I lose track of what the hell is going on. So my theory, and I'm sure there's a lot of other ways to do it, whatever works for you or anyone, do that. Remember that this stream is absolutely not my way or the highway. That's not the point even remotely. I wish that I was able to just have some simple free TopStep X or something like that, and you know, not have any indicators or volume or anything else, and just make a couple of trades a day and go chase mama around the couch, you know. I mean, it would be great. This is the way that I've settled on, and with the complexity that I guess I feel like I need. Yeah. So there we go. Full session in view, 1 point high. What does that say to you? Well, that says like retail soup, baby. We're going to have a big bowl of retail soup for lunch, I guess. They're going to just grind them up. Now, Trump, of all people, is going to act like he's religious and pious. That's just Jesus, Christopher Christ. I wonder if any of those people... never mind. Never mind. Okay, what happened now? What happened now? Take a quick lap around the roses here. Well, here's Friday. Here's today. Just cleaning up these singles, you know. I guess. Big selling tail today. The new all-time high on Friday, briefly, like we needed, like the economy deserves that. It's really weird. And here we are. NQ. We had 100 or just 90 or something point range in the ES on Friday. And of course the NASDAQ was, you know, I don't know, multiple hundreds, I guess. Well, what was it? Let's see. 902. 504. Wait a second. I don't even think that's it. 504. So 400 points in the NASDAQ on Friday. I used to trade the NASDAQ, and I'm starting to think that maybe that's the way to go. So I want to get this VPOC migration or IB vetting process over with and get that trade in the books. Still at the same position. One trade left for all 5 of these to be XFAs. Or, well, one more positive at this point. Imagine that, 400 points. That's why all the gunslingers are trading the NASDAQ there. Riding the snake, baby. Yep. So, hands off the mouse. I wonder how long Reverend Trump will be talking. God, that's so crazy. So crazy. My approach here, I guess, is a good a time as any to talk about this. What I'm doing is I am in the process of vetting or identifying a specific trade setup for its whether it has an expectancy, a positive expectancy or not. And why I'm doing that is I believe that the market is a random environment. The outcome of the next trade is 50-50. It's like a coin toss. And the only way to correctly approach the market as a statistically significant, consistently profitable business is to approach it from a point of view of probabilities. And that's not just something I dreamed up. It is the realization and the methodology used by the most successful traders in the world from a long time ago. Ed Thorpe, Jim Simmons, Ray Dalio, Paul Tudor Jones, Tom Sosna, Mark Douglas, Tom the Trader, the best, loser wins guy, Tom B in the Traders Lab, Rod, Garrett, JR, and MR, and Static, all of it. It's all the same. Sure, gunslingers can have profitable days, but what you're looking for is consistency. You're looking for an edge over a statistically significant period of time and data set. You want to be sure that you're outside as best you can, get outside the parameters or get outside the corral of random distribution. If you flip a coin, I think everybody in the world understands if you flip a coin, it's 50-50. Also, I don't think anybody would be surprised if you flip a coin 10 times that you would have a majority of either heads or tails. That's called random distribution. If you flip that coin 1,000 times, very, very much more likely to have a 50-50 distribution. That's outside the random distribution area for that particular coin flipping exercise. So what I'm trying to do here is vet the IB trades. I've identified the setup. I'm trying to perfect and identify the parameters which validate that taking one of those setups, of which there's only two. And then I will capture that data and determine whether that has an expectancy or not. Now, there's a couple of things that you need to think about. First of all, win rate is just the absolute bullshit fodder of internet gurus taken by itself. I can have a 90% win rate and go broke because my risk to reward ratio is upside down. If I lose 10 points and I win 2 ticks, guess what? I'm going to go broke pretty quick. You got to have 40 wins in a row to compensate for 1 loss, for example. So that's why when these guys win right, 90% win rate, I'm an opening range trader, opening whatever the hell they call it. Well, where win rate is applicable and how it fits in a statistical analysis about trading is to calculate your expectancy. So win rate times average winner minus loss rate times average loser gives you the expectancy. Over this 100 trades, I have an expectancy of 5, whatever. Pick a number, whatever the math shows you. In that case, then you have an expectancy and you take that setup and that trade whenever it presents itself, and you're able to determine over a longer period of time, is this current price action within the parameters or not? If you're in a random distribution of losers or losses, losing trades, however you want to frame that or identify that. Is that within the statistics of my 100 trades? Is it still within the expectancy and still within the probability? If it is not, then you need to think about that. If it is, then you just keep going. That's approaching trading as a business. That's why the most successful traders in the world all did that. They're all mathematicians. Not a damn one of them is a finance guy. Really, I don't think. They all have recognized that it is a matter of probabilities. And, countless books written about it and everything else. It's not like any of this is something I dreamed of. But I am buying into it, and that's why I'm trying to establish this. So, circling back then to the initial balance trades, which I am working on. Now, there are two. There is the initial balance failure, which is essentially a mean reversion. Comes down. Now, remember, there's no initial balance trade is in play remotely now, because the statistic isn't valid until 9:30 by definition. So we have it's typically understood that if we have a rotational day, just think about this in common sense. We have a rotational day, what would be the preferred or the suggested or the anticipated IB trade? It would be an IB failure. We come down, we don't go further, and we mean revert back. What's it been doing all day for the first hour? Mean reversion. Okay, is that likely to continue? Probably. If we have, as in Friday, a big directional day, the trade in that case that would be suggested what would be the IB continuation, where we come down, do whatever price action you require for your setup, and then it continues on. We wouldn't expect it to mean revert because we're in a directional day. So the reason I chose the IB is it's obvious as the nose on your face when that setup happens. The context of the day suggests what parameters would be valid for either the failure or the continuation trade. And that's why I'm trying to do that one. It gives me an opportunity to trade in both day context types, rotational or directional. Now, if I were trying to vet only the mean reversion trades, this would be a great day, huh? But in a trend day or a directional day like Friday, you got nothing to do. You go out and mow the lawn or whatever it is. And one of the dangers there is that you try to, which is one of the things humans are so good at, is you try to see a pattern or see, your mind will start to see things that don't exist to justify an entry because of FOMO and boredom and all that other stuff. So that's where we are. So now what I'm doing in these days is I'm watching the context, and we're approaching 9:30 when the IB statistic will be set. And then I'll have to make a soul-searching decision at that point. What happened now? Another thing that's really important to point out right here that I actually need to make a hot key for. Do not trade to the statistic. Okay, for example, well, we're below the IB, we're below the VWAP, we're below the mid, we're below the POC, we're much close, we're right down here close to the IB low. I'm sure we're going to take the IB low stat and you go short. And then you immediately get salt pounded in your butt because it goes the other way. Right here, for example. Believe me, I have the statistics to prove that's a real bad idea. Do not trade to the statistic. The statistic doesn't even exist until 9:30. And it doesn't exist until Price takes that out. Then you have an original trigger for one of the two IB trades. Now, the IB statistic is significant. That's also another reason I chose it. Greater than 97% probability in all four open types. The IB statistic will be exceeded by price in the balance of the RTH trading session, either the high or the low. All the statistic says is that at some point after 9:30 Central Standard Time, price will exceed the IB high or the IB low at some point in the balance of the RTH trading session. That is, in fact, the statistic. Pretty good statistic, but that's what it is. And if you think I'm lying to you, 97.9 higher out of range, 98% higher in range. So in this particular day, the probability is 98% that we'll take out the higher low. And I'd say we're going to. Lower out of range is 98.3, and so it's better than 98.0. So 97.9 is the lowest probability we have for taking out the IB statistic. Pretty good, huh? So, again, don't trade to the stat. It's almost 9:30. We're close to the IB high. We're above all of these guys. I just know we're going to take that out. And you go along. You'll be floored at the number of times that we'll do this, just like we did down here. We come down here, and then we do this one. And then we do this one. Yeah. So believe me, if you take anything away from it, don't and trade to or in anticipation of the statistic. Now, we are now past 9:30. No, we're not. We've got 10 seconds. Okay, 9:30. Now, the IB high will not move higher anymore, and the IB low will not move lower anymore. It's past 9:30. The statistic is set. Will we take out the IB high? Looks like it. Should you trade to that anticipation? I don't think so. After the IB high is exceeded or the low is exceeded, then the statistic is in play, and you can determine if you're going to have your following setup or your following trade, which is the IB continuation trade or failure trade. If you had to look at today's market, you'd be saying, boy, this has got to be an IBF. Then the next thing I need to do, assuming that we take the IB high, which we have not done yet, be sure you remember that. If we take the IB high, and this is suggesting the IB failure, do I have the range requirement here? Do all the other parts of my trading plan come into being with Reverend Trump blaspheming in the White House? I'd be a little spooked about that. And look at how we're teasing this thing up here. Look at how we're teasing that. Boy, if you were trading to that IB high, you're puckered, aren't you? I'll never forget once in the TLab, we were doing this kind of thing, and everybody was all excited about the IBI, and I just posted, and now watch us come across and take the IB low stat, and sure as hell that's what happened eventually, within an hour or so, and there were several of the newbies in there that were going, God, how did you know how to do that, blah, blah, blah. I said, just, it's a 50-50 guess, man. There we go. There's the IB statistic, which has just now been exceeded. Will we trade north or will we trade south? So now what I need to do is screw this thing in a little bit where I can see what I think is some sort of a, first of all, do I have the range? 9 to 5, that's 4. So that would be the range. The range requirement would be set, and I've obviously missed my opportunity for the entry here by talking. I guess we traded through it, we came back, we got up, didn't go anywhere, and now we're trading lower, and I would be scaled. Shit. Oops. Over. Well, another thing about the IB failure trade, which I believe you need to be concerned about, the goal of our trading is not to scratch. We're here to profit from this, to be consistently profitable, not consistently dodge the bullet. So, obviously, risk neutral is super. Right there, you're risk neutral. And I blew that. I blew that entry. Okay, or I missed it, I should say. Now where are you going? Well, So in order to achieve my profit target, which is T2, I need to have 12 points, 48 ticks from the entry. So 9 to 9 plus 2. I need to come all the way across the range and get past all these levels and POCs and mids and VWAPs and crap to get to my profit target. Is this a reasonable application? Is it reasonable to put my account at risk? Granted, the range requirement to the scale is there, so that's not a problem. And I absolutely don't have a problem moving my stop. That's not even the question. So, but is it worth putting the account at risk in this case when I have a level? The mean is right here, which is the essential, mean reversion. That's the whole target, isn't it? When in reality, I need to be down here at 97-ish to get my T2. And I realize this might just be rationalization for being a wuss, but I've been thinking about that a lot lately, especially with these IB failure trades, because the ranges have been tight on them. And also you need to look back at, what the hell have we been doing all day? Have we been pushing this out anywhere? For the first hour, we certainly didn't. For the first hour, we do have a completely across range. You've got you would have the target. It's just thinking out loud. Remember, this is my journal, right? And I hope I am not just rationalizing not taking the trade, because that is eating the dog food, right? That's the other side of the coin. If you vetted this to be the case and this happens, you take the damn thing every time it presents itself. That's how you validate the statistics or the probabilities of that trade or not. Not trading doesn't do much for your statistics, right? So here was our entry, let's say, right there. Let's just call it straight at the IB high, which is 69. 09. Dyslexia is a wonderful thing. And 3 is 6. So there's our scale. So we're risk neutral scale. let's see where we go from here. We would have been scaled at about 935-ish or 4-ish or something like that. I have no clue. And, you know, it's trading, right? It's 50-50. What the hell's going to happen? I don't know. Now, the reason I like the risk neutral facility is that, boy, that's a huge psychological relief to me. And I think that it makes sense in terms of account preservation and risk management. Rod has gotten to a point where he doesn't use the risk man after now 4 years. He doesn't use the risk neutral part of the thing. Still the same setup, still the same stop, all that. But instead of the risk neutral scale, he puts both targets, in the case of a 2-lot, at the T2 or somewhere that makes sense to him. Ah, look here now. I guess maybe Reverend Trump has done something. So here's another possibility of a setup. Okay, if you this is where the nuance of trading becomes so difficult for me. Here was the statistic. We traded lower, we traded up higher, we came down, we didn't get anywhere, we sold down here. Okay. Here's a statistic. We traded lower, we traded higher. And you see what I mean? It's all time frame. Or is it this window you're looking at? Is it this window you're looking at? I mean, in theory, you could be looking at, you know, the daily or the weekly chart. That's the nuance of trading. And that's where your account size and your account risk, I think, dictates the time frame you've got to trade within. I believe. So let's say, where were we? 9? Ooh, 10, 11. Boy, you were puckered right there, huh? You only had one more point to go and you were stopped out. Now, remember, the risk neutral scale. So it's not a loss, but it's not the goal of our day. Has the tanker turned? Are we going to trade higher? Who knows what they're doing in the White House? You know, that's the part that always spooks me. And the thing that bothers me even more, I think, is more troubling to me, is that truth or logic or reality don't seem to have anything to do with it. So they can, you know, say whatever, spin whatever, do whatever. And that's a real unknown for me. So that makes it pretty tough. And what do we got here? There we go. So there's one tick separation. Now I used to keep it here, try to. And in so doing, this is what you got for your context so far. Do you know that all that consolidation has happened because you can't look at it? That's 50 cents. I can't. There's a tick. So those are 1 tick increments, and now you've just been stopped out. Because I suppose God is gonna do something, or, you know, God, my co-pilot or whatever. Yeah, it's too crazy. Too crazy. That's one of the things that I can never understand in the whole election cycle was how the evangelical or the whatever, what do they call themselves? Christian nationals or whatever it is that are so devoted to Trump. I don't understand how you can call yourself a Christian and justify having anything to do with that guy. I mean, it seems to me from my Christian upbringing, which was pretty limited Methodist church, you know what I mean? But I can't name all 10 of the commandments, but I can name 3 offhand that guy breaks on a regular basis. And how that can be the standard bearer for those people, I don't understand it. It doesn't make sense to me. I am just dismayed at the ability of the human condition that they are so good at rationalizing and being hypocritical about stuff, you know. It's amazing to me. Truly amazing. So here's what, if you had to look at this, what's your contacts up? Even more so, even more up. Look at that. What have we really done? Well, we just really increased our IB a little bit range to the upside by 3 points is all. Looks pretty dramatic though, doesn't it? Now if you get this thing screwed into the range requirement, we're still at 50 cents. We haven't really expanded the range very much. One of the problems that I have, or I don't know problems, but one of the things that I've noticed has been hanging me up lately, the last week or two. It's pretty obvious what kind of a session we have had to this point. It's been rotational. It's been mean reverting. We get the IB statistic, and then I find myself not like and I've even said it, I thought the suggested trade would be the IB failure. But the several days in recent history, or, you know, there was this change in the weather. You know, there was a direction, the tanker turneth, as Tom says. And we went where the IB continuation trade it turned out to be more of the correct choice and profitable. I don't know I'm trying to figure out how to recognize that or anticipate it or whatever you do with it. For me, having this down at a point makes a lot more sense in terms of relative movement. And looks like the IB continuation is going to be the way to go. So that would mean, like I was talking about a few minutes ago, by zooming in or out, you know, by your time frame. So we took the stat, we tested lower, we came up, we came down, couldn't get any further lower, and now we're trading up. So that would suggest the IB continuation, where zoomed in on much more granularity was the IB failure. Paralysis by analysis, perhaps, I guess. And you got scaled here, And if you did this maneuver, you got scaled here. Where is it? 9, yeah, 12. You're scaled right here. Right there. You're scaled right in this consolidation. So you're happy about that. Now, for me, it seems to me to be more potential for the IB continuation trade because I don't have all of these levels and obstacles down below us here. I forgot to do the expected move again last night. I got to do that today. So busy with I get so down the rabbit hole with this backtesting code thing that I am just upside down. Bummer. Yeah. Oh, that reminds me, that's probably a good thing to think about here. $13.47. $13.5 and 63. I'll do these, I'll capture these screens and then do this expectation thing later. So it looks like that IB failure is working out pretty good. Oops, what happened there? Okay. Okay. And it's so funny to me. I lost myself here. Okay, back to business here, I think. Yeah, that's right. Just a reminder, this stream is in 1440p, so blurry on your end, you can hit the gear thingy and select high def. Okay, and now we're gonna do this, huh? I have to continually monitor myself to be sure that I'm keeping a good handle on the monkey mind thing. You know, I'm really over this vetting story and want to get this last trade over the hump and then on to the next whiskey bar, you know, but I have to be real conscious of that, and I'm probably too cautious because of it. Paralysis by analysis, I guess. Well, what happened here? Zipper. Open the zipper. Undo. And repair all these singles. And then what? We got a big row to hoe down here. We got all kinds of room to be, you know, before we got to a new high or a new low or the previous POC, MCVPOC or whatever else. We got kind of a whole lot of nothing going on there. The Fed blackout, so that's that's that. And I'll be the first to tell you, I'm not sure what to do here. I'm really sick of being cautious and conservative, I'll tell you that. I've actually thought about, in consideration for my psyche and the stream, etc., as to when these days are like this and I don't foresee any real interaction. Now, did I screw up here? Probably. I don't feel bad about not getting involved with the IB failure because it just hasn't been doesn't look like it's got a very good risk reward potential or a valid reason to put any account at risk. Not saying this is a hell of a lot better, but at least it's got some upside potential. Anyway, I was thinking about maybe just, you know, not trading with the same philosophy, or at least especially without the IB constraint as I'm functioning under here in the minis, to go over to the micros and just trade more or less like normal. But then I thought, well, that's pretty stupid. Just get this trade out of the way and be vetted on these trades and then go. So let's look at it. What happened? Well, we came up through it again. So on a bigger scale, we took the statistic, pulled back, traded up through again, came back down, couldn't get any further lower. Validating an IB continuation, I guess. And are scaled right here. Right in the middle of this big consolidation, we're scaled. Now, would have been scaled. Let me rephrase that. Here's a previous all-time high on the 28th. We're ticking them out like shooting birds on the wire, you know, it's pretty silly. 262 contracts living here at 15. There was 600 here, if you remember, right around the open. Just after the open, at one point, there were 600 contracts laying up here, and there was 300 quickly. Yeah. And of course, none of them are traded off, so they're just pulling and stacking, dropping down, which begs the old question, is it the lid on the pot, or is it a magnet to draw a price towards it? My guess would be 15 is a big strike thing. Now this is triple witching week, and options, expirations, etc. So there's that. Well, if it's one thing, it's another, isn't it? Going to see what happens right here, right now, at 15. See what's going on in crazy Toontown. Oh, I didn't even know. I didn't know Reverend Trump was going to the UK, but apparently he had. This NVIDIA's NVIDIA's CEO Hong is going to accompany Trump at a state banquet in the UK. Okay. Okay, well, the greed thing is falling way off on the S&Ps. Back to neutral. Crypto, who cares about those guys? I guess this guy is still talking. I don't know. Oh, wait a minute. It says he's, well, that doesn't, oh, 10 o'clock Eastern Standard Time. Yeah, I get tripped up because these Squawk Box things are in Eastern Standard, I guess. And my filtering over here is in Central. So, yeah, there's that. Let's get away from that and get back to business over here. Well, they did trade out. Now we've got it. Now they lifted up to 17s. We've got economic data coming out this week. I don't know what the hell's going on today, but let's have a sneak peek at the week. This week, what are we going to do? Well, there's today. 2 times nothing. 3-year note, not a hell of a lot. No, now we're going to get PMI Wednesday. 10-year notes and PMI. Thursday, we got the core CPI. So we got a 30-year bond auction and initial jobless claims. Okay, that's Thursday is going to be the big news day of the week. So there you go. There you go. Yeah, I have discovered amongst, in the deep dark reaches of my psyche that I am much more comfortable with the IBC trade than the failure, I think. And comfort should have nothing to do with it. It should be strictly probabilities and statistics. Get the range back in scale or in view. Once again, 1 point high and the full range, the full session so far in view. My two opportunities here on the IB trade would be this one for the failure and this one, which I think was the more likely in my world for the IB continuation. So 9 to 12, there's the scale. Now we have upside target could get us to, what do we got to be? We got to get 9, we got to be 19, we got to get to 21. So right there would be our risk our 2 lot, P2, 12 ticks, 12 points. Yeah, so that's that. Okay, get ready to trade. I'm gonna go load my tea glass here, Antonio. All right. Are we rich yet? No? Okay. I don't know what's going on elsewhere. Ooh, we got a new guy. Whoever that is. Oh wait, that's the wrong. That's the wrong. There we go. Ooh. Well, a few people in Static took a full stop on the IB failure, so there you go. Guess I don't feel so bad about not doing that. Then, is this thing doing something right, or it seems like it's not trading very right here. Huh. That's pretty weird. All of a sudden the mic didn't seem to be doing its thing, but I guess it is. Too many moving parts here, dude. So this is definitely not an area that I would be engaging. I guess I've explained this enough. I'm doing the IB trades now, so there's nothing here for me to do anymore. And I'm at a point where I'm not sure. It's a lot like the IB or the mean VPOC migration trades. At what point is a VPOC migration just diddling in the middle, you know? There's no good example to show here today, but looking at the IB trades, at what point in time do these IB failure, IB continuation, are they not valid anymore? Are they not really a valid signal anymore? I don't think I know that. I don't have a way to. I'm sort of in the mindset that if get your business done in RTH 1. Yeah, coming. Yeah. Well, I tell you what, this IB continuation would have been my go-to trade. I should have done that one. There was the scale. And now we're getting up there. We get up to 18. Wait a minute. We get up to 20, 21, 22 up in here. And that would be T2. And we're just slowly ticking up the chart now. Mama's calling me. I got to go see what's up out here in the kitchen. Well, while I was gone, what did we do? We did another IB continuation, huh? I really don't know what to think about that. I guess in this instance, that would be fine. I mean, late to the party now, but yeah, so here we go. All right, so what's happening now? Who's on third? These little icebergs here. Well, little, I don't know about little, but got 307 up at 17. Those guys haven't gone anywhere. They were at, was about 600 down at 15, if you remember correctly. If I remember correctly, let me rephrase that. And here we have an example of why that wasn't a good idea. I don't know. Just I'm curious about how long it takes. I'm thinking that after the first 45, first, session period, RTH 1, that I'm not going to be thinking about that stuff much anymore. And I might point out that neither one of the trades, of the IB trades, actually, well, unless you did a mean reversion absolutely off the bottom all the way to the top, did you have the minimum 2-lot package profit target? I assume that the festivities in the at the White House are over. Well, that's not good. The New York Fed August survey found worst probability of finding a new job since June of 2013. Trump, whatever. Trump finishes his remarks. Okay, so he's done now at 10:32. Okay, good. Thank you very much. Okie dokie. Oh boy. Okay, now what are we doing? Oh, the world famous the world famous VPOC migration here. Now here is a point which the static we look at when the VPOC or the VPOC migrates outside of the IB. Which it is done here. But I think that none of this is valid until you've taken into consideration. Yeah, and there you go. And there you have it. Context was my point. Boop, boop. This is a rotational day. They're making a big blender full of retail soup. Yes, there was some movement. I'm only vetting the IB highs, IB statistic trades, which you can go back in the stream and look at that or listen to that. But basically, we have the IB failure, kinda, sorta, maybe, right here. Got no place quick. And then we have come back up. We have kind of the IB continuation trade over here, both of which got to scale, I might add, both of which got to the mean reversion scale, which were then, means they were then risk neutral. I don't mean mean reversion scale, I mean risk neutral scale. This one the same. The problem is, neither one of them have gotten to the profit target. So we were at, now what is liquidity doing? They were at 15. There was about 600 of them at 15. Then they moved up to 1,600. And now they're at 16. Now they're at 1,700. $288 of them at 17. They were 15 and 16, now 17. They're just walking it up. What does that mean? Beats me. Beats me. What I know is when you start doing this, ring around the posy, right? Ring around the posy here, it's not a good thing. And we're just stacked on top of each other with levels all over the place. And the probability of a successful trade in that environment for me is extremely low. A very, very low motivation to put any kind of capital at risk. And I suppose that's probably the ultimate cop-out, but that's my story and I'm sticking with it. When you look at the profile in a closer inspection like this, a couple things stick right out. We don't have any excess on the top side. Much more of a balanced rotational situation than appears in Bookmap. And there's no taper or Typically, the auction should come to a conclusion. When it's a flat top like this, it would suggest that the auction is unfinished to the top side. That isn't what I was trying to do here, but anyway. What I was looking to do was this first print on the on the ETH. And it is, the open is 83.75. Okay, now I can do the, is that right? I can do the, open is 83.75. Okay. I'm gonna redo the expected moves over here because I didn't do I didn't do them last night like I should have. Too busy with this stupid backtesting code, which so far has only succeeded in giving me really tired eyes, lack of sleep, and dropping the ball. 83.75, I think, is what it was. Boop. Okay, so thir 13.5 plus 13.5 is 96.97 quarter. 64.97 quarter. And this one would be minus 13.5. 70 quarter. 64.70 quarter. Okay. $63.02, so 63. Something wrong. Something wrong. Something's crazy. Yeah. Doesn't make any sense. Yeah, good enough. Doesn't seem right here. Well, that's ridiculous. Huh. That didn't make any sense, but okay. Hmm. And out the bottom we go. Boy, these days are getting kind of boring, I'll tell you that right now. You think it's boring on that side of the screen, you got to be over here. So anyway, so now they're going to look at the bottom. And, you know, looping back to the conversation about at what point do I stop thinking these trades are, or these setups are applicable. So here's about a perfect IB failure. Not really, because there's no test of it, but it's definitely a mean reversion. Not very far, but there's the mean. So that's the problem. These kind of days are best to not trade them, I think. Much as I hate to keep saying that, Jesus, I'm really sick of this, but that's that's kind of where it is. Basically, just a tight consolidation, serious big batch of retail soup being ground up here, as far as I'm concerned. And I will, yeah, let's look around the horn here. Friday. This is my micro composite or high volume chart, basically. There's the Friday, huge selling tail, big, you know, all-time high to a big selling tail. In an outside day of this one, and now we are in this little bitty guy over here. Friday had exceptionally high volume, which was kind of surprising that they would come back in on a Friday. That's the market profile. You can see how they're just trading over these singles right here. They're just repairing this section right here, I guess. It's the market profile, by the way. The NASDAQ, not any different. Well, probably.
he told you, he sent the email, right?
He's gonna email the quote, yeah, when he gets home, or back to the office or whatever it is. Okay. Oh, boy. Here we go. Well, I tell you what, I think I'm gonna hit the midday break here. I've got a guy coming to. We've got termites, so it's just a joy to behold here. Yeah. Here's the book map. My workflow now, as I have said a bunch of different times, is I throw this vertical line, which is just a visual clue for me, at the start of each session. My new thinking is to keep the entire session in view, so I'm always firmly grounded with context. Of course, got the volume profile, session prices, the statistics, which are all input early in the morning before the market opens. And yeah. A tight range. None of the triggers, of which my VPOC or my IB trades. Remember that the IB statistic is not valid until after 9:30. So this is not one. Not a valid opportunity. That is one right there by 2 minutes. Sort of a VPOC, I mean, sort of in alignment with the rotational day. That would be an IBF, which IB failure. The other way would be the IB continuation, which is a little later in the day here. But it's important to point out that neither one of these, actually no trade, except unless you wanted to really squint your eyes and call this a mean reversion trade from the bottom to the top, would have yielded the profit target. So we're not in this business to take scratches. To put our capital and our account at risk in the market for a scratch is really stupid. Sorry. But that's got a really low probability of success long term. And that's the point of this, is to have a long term, consistently successful business. Now, they may break out of here and go ripping, you don't know. But it's 12 o'clock and I'm going to go see if I can scare up something to eat and take a breather for a minute. I start at about 6 in the morning, and this stream goes, the reason for the early start at 8 o'clock on the stream is to get all the pre-market done, and then to ensure that the stream is operational and continual until 1500 in the afternoon, and there's no trades taken off the stream. So there's that, for the purposes of accountability and transparency. Here we are. Goes around the horn. Nothing much to look at. What do we got for? Well, there's the worst probability of finding a new job since June of 2013, sorry. 2013. Think about that. That's 12 years ago. That's pretty telling. Okay, so what do we got? Well, this is ridiculous here, huh? Wow. Well, I hope you found something better to do with your time than get chopped up. Well, and here we are in the closing minutes of a real boring day. I hope you're safe and didn't try to push this trading today. I certainly did not. Basically, what we've got going on here is a real inside day, medium to light volume. Basically, just a chop fest in a tight range. I'm looking at the news coming up for tomorrow. No 3-star events. Wednesday, we've got PPI. And then we've got the 10-year notes. Thursday is going to be a big one with PPI. And continuing jobless, PPI. And Friday's not so big. So, by the way, this is investing.com, which is free, as is this Financial Juice. Obviously, you can pay if you want. Financial Juice is a little more like the calendar is over here, and then it's a little bit more like a squawk box on this side. We'll have the market and close orders here at 1450, and they'll show up in Financial Juice. And then here we are. Ugh. The micro composite. POC. We're not really going anywhere, doing anything today. You can see what the overnight, which was fairly light, range was, and here's so far today. 16 to 90, so basically 25 handles wide all day. The stream starts every morning at 8 o'clock, where I do the pre-market and the explanation, set up all the statistics and everything are input for the current day's upcoming session prices. And that's every morning at 8 o'clock. And the stream then runs from 8 o'clock in the morning to 1500. So I'm on a hold here with the people for the 401k on my headset. So assuming if somebody answers, that'll be the case. Otherwise, I'm going to have to, I'll continue on here, and then we'll be closing the stream off at 1500 like usual. This is the kind of a trading day where if you approach trading as I do as a business, based on probabilities, and you want to maximize, or let me rephrase it the other way, you want to minimize your account risk exposure to only A+ setups that would have the minimum required reward to risk ratio, then this is a day to go, wash your car, mow your lawn, do something. I watch the market, but still, it's absolutely not a time to be involved for me. I don't know, have no idea where or how anyone hearing my voice here grew up or learned about life. But my case, I grew up on a ranch where basically your reward was directly proportional to effort. And that is absolutely not the case with trading. In fact, it's almost the other way. There's nobody that says the more you trade, the more you will be rewarded. Typically, the more people trade, the less successful they are. Much better to take one A+ setup, or whatever you want to call it, setup that's got a good 2.5, 3 to 3 reward to risk ratio. And, with all the other things being in your favor, like a range requirement for entry and those kind of things, than to try to scalp. Very definitely. So it's important to remember that there are 3 positions in trading, right? There's long, short, and flat. And a lot of the time you're going to be flat. So let's just wait this out till the 1450, and we'll shut her down at the top of the hour. If you need more confirmation about why it was a good time to stay out of today, there's the open. Here we are, about 4 handles below it. Basically, this entire day was nothing but chop fest. And as usual, the lady I was on hold with just got back on the phone precisely at 50. So here's our market on close orders in balance. It's 1,574,000,000 sell side of the NASDAQ or the S&Ps, 773 million sell side NASDAQ, and 415 million sell side Dow, and 622 million sell side Mag 7. So have yourself a great day. I hope it's better tomorrow, and I'm going to try to figure out what to do next here as far as this other banking stuff goes. So I'll be back on at 8 o'clock in the morning tomorrow with the pre-market. So tune back in and we'll have a lot of fun. Hopefully the market will be a little more cooperating. Have a great night. Do something healthy for yourself. Get away from the screens. I mean, days like this, you should take advantage of them and do something else. Go outside, go to the gym. You know, take care of your physical side. Remember that at least 80% of trading is your mental ability, capacity, health, all those things. So take care of that. All of that is as, if not more important